Hey there, Kaiser community. I have Brian Uretzky here with me today. So there's obviously a lot of challenges in the commercial real estate industry, and we've talked about retail, we've talked about office in the past, but today we want to focus on industrial. So Brian, I want to get your opinion. What do you think of the overall state of the industrial sector?
Yeah, I think the industrial sector is a really interesting one within the commercial real estate universe. When you think about most of the headlines that are coming out on the industrial side of things, you see this opinion that the industrial sector is basically bulletproof in this environment because of e-commerce. And I do agree e-commerce is a strong tailwind for the industrial sector. If you look at the history over the past 20 years, e-commerce has grown to be roughly 12% of overall retail sales. If you look at the estimates, given what's happened with COVID over the rest of this year, you're seeing people expect that e-commerce is going to make up roughly 15% of overall retail sales, which is a big jump from what we've seen historically. But I think that there are four factors out there that should temper people's enthusiasm for the industrial sector. The first factor is the economy as a whole. If you look at the economic data, even looking at the jobs numbers today, where the unemployment rate dropped from 13.3 down to 11.1%. That 11.1% is still a historically bad number. It would be the highest number going all the way back to the Great Depression. So there are a lot of people that have lost their jobs that won't be getting them back in any time soon. So that's going to have an impact on the overall economy. If you think about GDP estimates out there for Q2, you're seeing numbers down 30%, down 40%, which would be 3 times worse than the previous low in that series. And then just overall spending is exceptionally weak. So in terms of just the economy and how businesses are operating, everyone's looking to cut costs at the moment, and everyone's very, very concerned about the overall spending picture moving forward. That's factor number one, so very weak economy. Number two, I think it's important to understand that a lot of industrial landlords are supporting businesses right now that will be closing their doors. When you think about the hotel space, and when you think about the restaurant space, and when you think about the retail space, some of the estimates that are coming out of those sectors are very weak. When you think about some of the estimates in the restaurant sector, you're seeing estimates nationally that 1 in 4 restaurants are going to be closing their doors. Obviously, the hotel sector has experienced a lot of pain thus far, and a lot of hotels have already shut. And then when you think about the retail sector, you're talking about estimates of 25,000 store closures this year, 20,000 store closures each year between now and 2025. That's a lot of businesses that are going dark, and a lot of industrial landlords support those businesses. So that really opens up a lot of space on the market and really presents, at least in the short and medium term, trends that probably look like rising vacancy rates and falling rents in the short and medium term. When you think about another factor that could apply pressure to the industrial sector, think about construction. Construction numbers and net absorption numbers we're trending in a direction that was looking like rents would be a little bit softer in the short run, maybe stable, but construction numbers have risen over the past 2 years. Net absorption is down marginally. Those numbers were already showing weaker signs leading up to COVID. And now with all the additional space that might be coming online, it's going to take a while for e-commerce to fill that void. So I think that's a third factor that really should at least have some negative impact on the metrics within the industrial sector. And then finally, the fourth, and I think most interesting of all of the factors that could weigh on the industrial sector moving forward is coming from the retail sector. If you think about how many stores and how many big box retailers are going to be going dark over the short and medium term, you see the JCPenney headlines, you see the Sears headlines. There's millions of square feet that could be coming online really soon. And there are a lot of industrial users that could use those footprints for their last mile delivery, which takes away from some of the space that they would be using within the historic industrial sector. So there's a lot of space that's coming online from construction, from the retail sector, and from just a weaker economy and businesses closing their doors. I think those 4 factors really paint a softer picture for industrial, at least in the short and medium term. Long-term e-commerce will fill that void, I believe. But in the short term, I wouldn't just say that industrial is bulletproof and rents are going to be rising over the next few months and possibly years.
That's really interesting. And as you can tell, there's a lot of variables that go into everybody's situation. So if you, Kaiser community, have any questions about your commercial real estate situation, we would be more than happy to help. Just go ahead and give us a call at 602-9-KAISER or send us an email at info@kaiserco.com. Thanks so much.
Thanks, guys.